Swiggy. Quickly pull up the counter before we get to the conversation with Rohit Kapoor. Was this expected because of the extent of investment this company needs to make in dark stores? That's one of the questions my colleague Mihika has asked Rohit Kapoor. Listen in.
I think we are not guided by what competition is doing here. We have our own path, and in Q3 of FY25, if you see, we had 705 dark stores, totaling up to roughly 2.5 million square feet. Just in terms of January, we have added almost like 86 new stores, and we remain on track to have a total square footage of almost 4 million square feet by March 25, which is now about a couple of months away.
Got it. Your advertisement expenses have gone up 40% on a quarter-on-quarter basis. Why is it that? Is it because of competition? And how much have discounts increased by? And what's the outlook for discounts going ahead?
Look, I think if you think about quick commerce especially, we are looking at, and the guidance on the categories is north of like 80% growth rate. You can read various annual reports and they'll give a similar guidance. So we are looking at a category which would potentially be $40, $50, $60 billion range, right? And there, right now, the focus is to expand, and marketing or advertisement and reaching out to consumers, connecting with them, establishing the brand in many new geographies is very much a part of what the overall investment cycle is, right? In terms of discounts, I think they remain fairly range bound. I don't see them any different from any category that you see growing or expanding in India.
Got it. Coming to your Q3 numbers, we have seen net losses widen to almost 800 crores. When do you expect the company to turn profitable, and what will be the levers to take the company to that profitability path?
Yeah. So Mika, it's very important to sort of parse the results into three distinct parts, where two businesses, for example, if you look at food, we have expanded our EBITDA margin from 1.6% to 2.5%. That's a 90 basis point expansion in EBITDA margins in just one quarter. In Dine Out also, we've broken even in December for that business. So 2 out of the 3 largest categories that we operate in are actually EBITDA break-even. The investment cycle is largely in quick commerce, where again the opportunity is large, and we will continue to invest in that area. From what we are striving to is getting to a company level EBITDA break-even, adjusted EBITDA break-even by October OND 25, and within that, quick commerce getting to a contribution level break-even.
Got it. And there's been a slowdown in monthly transacting users in food delivery. Do you think that the company might be losing market share?
I don't know why you asked that question, because you should look at our growth rate and the other growth rates available in the market. I don't think that's a factually correct statement. I do not comment on market share, but I think you should do your own work and you'll figure out that that's not correct. In terms of overall growth, I think we've always believed that, or not always, last few quarters we believe that the market will trend to between an 18 to 22% kind of a growth rate, and roughly about 1.5 times the growth rate that you're seeing in the base food market services category. 2-3 reasons. One is that the penetration levels that you see in India remain secularly very underpenetrated, whether it is restaurants per 1,000 population or the amount of ordering in people do. Compared to any global benchmark or even emerging economy benchmarks, we are not at the same levels. Second is the innovation and the pace that we have in this category and what we are doing. It equals the very best globally. I think if you my son studies in the US, if you ask him and many people who come here, they are quite amazed at the level of service delivery which happens in food delivery in India. Third is the budget which just went by. I think that's not trivial, because we had the Honorable FM present one of the most remarkable budgets in recent times, and the tax cuts which are there go straight to the TG that we cater to. And some of that, it's very hard to say exactly what happens because of that, but it is a very logical conclusion to say that some significant part of that money in hand will flow into consumption, and we are right there in the middle of the consumption economy. So there is green shoots, there are always headwinds quarter on quarter somewhat, but there is I think we are at a very early stage of evolution of a category.
Got it. You spoke about innovation, so I want to talk about your 3 recent developments: Ping, Swiggy One, and Swiggy Sports. Could you give us more details on the, what the future plan is with these 3 developments?
I think Ping is very recent. It's in the service economy, and it's actually a very new attempt to connect emerging professionals and established professionals with consumers in the space. So there'll be a time to speak more about it. On Swiggy Sports, let me clarify that there is no active plan to get into sports. Our very specific endeavor is to look at pickleball, and pickleball is one of the fastest growing sports in the world, and we believe that from a brand marketing standpoint, pickleball connects quite closely to a certain consumer base we like and we want to serve in a bigger way. Just as a fun aside, we also have one of the most iconic cricketers of India, Rishabh Pant, who has joined in as a co-owner, and we jointly co-own the Mumbai pickleball team, which is called Mumbai Pickle Power. On one, I think I believe you're referring to the launch of Black, which is an offering targeted at a certain percentage of our consumers who are high frequency, exhibit certain characteristics, and the main offering there is there are multiple things. There are several things which come as benefits part of the Black package, but I think the most important one is express delivery, which is faster than the platform delivery. Yeah. And also there's a on-time guarantee where if the order does not reach within promised time plus X minutes, you do get a coupon which is redeemable on the next purchase. We'll develop this offering because we're already seeing very strong response from whoever we have rolled out the offering to.
Yeah. I want a clarification on, Snack 10-minute delivery will be a new app, but Bolt is still integrated in the Swiggy app. So, one, why the separate app? And does this mean that eventually the company will have different apps for maybe an Instamart and a Genie too? And, you might see a shift from an integrated app strategy to a cost per user, every separate app for separate offerings.
So, Mika, I think you asked many questions in the one sentence, so let me go step by step. Yeah. I think Bolt is definitely our big bet in terms of the quick delivery space, where it is a marketplace where you get your favorite brands and a bunch of our restaurant partners are partnering there to come together to offer 10-minute delivery. In terms of the Instamart, by the way, there is already a separate app. The shortcut to the Instamart app as a separate app existed for quite some time, and we recently launched a separate app. The reason is very simple, that quick commerce as a category is turning out to be way larger than many categories in India, including expected to cross food delivery as well. And if there are consumers who are looking to transact first time, and especially newer geographies that we are entering on quick commerce, we want to give them an option to do so. It doesn't take away from the integrated app strategy, because a lot of consumers like the fact that multiple services are on one app, and we are very comfortable letting that stay and letting that evolve in that original direction.
So basically, the company will not be, moving away from the integrated app strategy, right?
Correct.
Got it. And my last question to you, you mentioned how, the quick delivery is, a big Bolt. To what extent do you think you'll be able to scale the 10-minute delivery segment?
It's already scaled. It's already touching almost 10% of order contribution are present in 450 plus cities. This has happened in less than almost 100 days of launch. So I think the traction is clearly visible. It is being accepted well by consumers. It's accepted well by restaurant partners who are seeing this as a vehicle on which they can also innovate, right? And I think that's the way we see it, that we put out something which is quite unique. It's actually, to the best of my knowledge, at this scale, the first in the world kind of an offering for our consumers, and restaurant partners are also innovating in their own space to come and ride on this chassis and platform that we've created.